Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts for today. First off, we'd like to wish the Town Hall community a very happy new year. We're looking forward to talking about 2024. You can see that I'm with Barry and Lisa, and I'm going to be introducing Jeff Weiner in a moment. So Barry, Lisa, it's great to be with you. We're together at a firm CEO meeting. So Lisa, Happy New Year to you.
Happy New Year, and welcome back, everybody. I hope you got a chance to unplug over the holidays. I'm going to start out by addressing what's blowing up in the Q&A right now. We have the latest forms on both the ERC voluntary disclosure program and the BOI reporting forms. We thought we were being nice to you guys and uploading them to the resources, but they're this super funky Adobe file. And most of you, 99% of you, other than Jonathan, have not been able to open them. So Jonathan's cracked the code. We're going to put that out in the newsletter to you, or we'll send it out in a broadcast message through the Q&A. But just understand it's not a you thing, it's a them thing. And we'll try to get you a format that is usable.
Barry?
So technology issues to start 2024 already, all right? Happy New Year to everybody. It's great. It's going to be an exciting year, an election year. We're going to talk a little bit about some of those things, but we're really, really happy to be here. And I know you're going to introduce Jeff, and then we're going to get started in a great discussion.
Yeah, so let's kick things off and look at the agenda. We got 4 items. We're going to start things off at a high level, even though Lisa just went right into some forms. We'll be talking about forms, but we're going to kick things off with Jeff Weiner talking about the current business environment and the outlook for 2024. Then Lisa's going to provide a technical update section. And then we're going to have Mark Peterson join us for discussion related to what's going on in DC, and we'll talk about some profession issues, and we'll close with our open forum. It's my pleasure now to introduce Jeff Weiner. Jeff is the CEO and chairman of Marcum. Marcum's a top 15 firm, over $1 billion in revenue. I mean, Jeff has just provided tremendous leadership over the past, couple of decades, 30 years. And really has built out Marcum through a lot of mergers, a lot of organic growth, expansion of service lines. And he's going to be providing a lot of these insights as we talk about we're going to look back at 2023, and then we're going to look forward and talk about how things look from an economic standpoint, as well as evolution of firm services and business models. Barry, I know you and Jeff have known each other. As I said, it was decades, but you guys go back 30 plus years.
A long time.
Yeah.
It means we're both getting older, but Jeff is the CEO of actually a $1.2 billion firm, Marcum. But I want to start it off, Jeff, with something that is going to relate to a significant portion of our town hall attendees, because a lot of them are in small firms. They're in business and industry and government, and some in larger firms as well. But the reason why we think that Jeff is a great person to be speaking with the audience today about 2023 and 2024 is, Jeff, when you started in Marcum, when you became the leader of Marcum, which was in the early to mid 90s, it was less than $5 million firm. And today it's $1.2 billion firm. And so it just sort of leads to the question, what do you think about the future of small firms in our profession?
Well, that's an interesting question, Barry. First of all, thank you for having me, and Happy New Year to everybody. But I've been in this profession for, I think it's 44 years at this point. And ever since I joined the profession, I've been hearing the predictions of the demise of the sole practitioner and the small practice unit. That has not happened in 45 years, and it's not going to happen anytime soon. Although we've built Marcum into a fairly large firm, there is certainly a place in the accounting profession for the sole practitioners, for the small firms, less than 10 people, less than 20 people. They're not going away. They're not going away anytime soon.
We would agree. And I think the sort of the confusion and the challenges and the complexity of the world just lends that to small firms as well, with the small and medium-sized businesses that are out there.
Well, let's kick off the discussion. So, Jeff, we're here with a bunch of your peers at this firm CEO meeting. A lot of, a little bit of discussion on 2023. You always reflect on the past year. We look back. The year started out with the banking crisis, inflation's spiking, everybody monitoring what the Fed was doing with interest rates. Everyone always talking about the pending recession. We had a lot of geopolitical events occur. So I don't know if you want to have any comments on that, but I think what the audience would really be interested in is, how did all of this, affect Marcum? I mean, how do you see, your line of business, as well as, the macro line of business for many accounting firms, as well as your clients? I mean, how did your clients kind of navigate the past year?
Well, Eric, it's interesting. First of all, the recession that everybody was talking about hasn't happened, and by all accounts, it's not happening. So there is no recession. There's certainly, because of interest rate spikes, there was a downturn in advisory work for all of us. Primarily because of a reduction in M&A activity, a downturn in capital markets activity. There were no IPOs, or very few IPOs. So that reduced the amount of advisory work. But I will tell you, from our perspective at Marcum, the bread and butter middle market private company work more than made up for it. And organic growth has been tremendous this year. I've spoken to a bunch of people here at this meeting, and 2023 was a good year for most accounting firms. Some of them claimed it to be their best year ever. And looking out to 2024 now, the Fed is looking at interest rate cuts, most likely starting in the second quarter. That should ignite, or at least interest rate stabilization should start to ignite some M&A activity, should increase capital market activity and IPOs, and start to bring back advisory work. Most likely sometime towards the end of the second quarter, but certainly into the back half of the year, after we all get through the traditional January through April busy season. So it's shaping up to be another good year for the accounting industry in 2024.
Barry?
Yeah, I think we certainly had some economic discussions at this meeting as well, and I think that aligns with what you're saying. There's sort of the added complexity of the world that is somewhat of a counterforce to some of that. We obviously live in a world today with a lot of disruption, some wars, unpredictability, some tensions between the U.S. and other places in the world, certainly China being at the top of that list. So it is not all a panacea, right? But I do think you're right in that the economy has sort of bobbled along in that and sort of done okay, and is likely to be moving forward. And I think we hear that from all size firms and small business activity. You talked about capital markets, small business opportunities and transformation because of things like AI and other things is even going to be greater.
Jeff, just double click down on the inflation impact of last year. I mean, how did that affect your clients? I mean, was that a discussion that many at Marcum had with their clients related to, increased supply chain costs?
Yeah, well, certainly I think the biggest factor in inflation last year for at least our business clients was the rise in interest rates. And that sort of put a damper on some parts of the economy. But if you weren't over leveraged, it wasn't as big an issue. It certainly affected our real estate clients, combined with the, particularly in the office market, with the, big cities where people aren't going back to work on a 5-day basis, or where companies are reducing their footprint. Certainly rising interest rates didn't help that. But now that we've seen interest rates probably peak and stabilize, and looking towards the inevitable decrease in interest rates, those commercial properties are starting to stabilize. People are looking to what they can do to expand their businesses later this year, knowing that borrowing costs have peaked also, and most likely interest rates will start to fall. They'll be able to expand and borrow money at a lower cost than they would have just last year.
And I would say interest rates also have an impact on the residential real estate market, which is a big engine in the economy as well.
Oh, absolutely. Residential real estate, construction, home improvements, appliances, everything that goes with it.
Right.
Well, let's look at and bring up this slide here. This is a survey that Marcum does with Hofstra University. This is from the late fall, where you went out, and it's a mid-market CEO survey. I think there's some really interesting data points here. As we look at this, the first data point is just, the leveraging of technology. 65% of the middle market CEOs in this survey said they're using or planning to use automation and robotics. 36% are already using AI tools. One thing that we didn't highlight in this slide was 35% of the CEOs were planning to use it. So you have about 70% that are either using it or planning to use AI tools. And then you look at concerns around economic issues, and then finally talent. So Jeff, this is something, I don't know how long you've been doing this survey, but what are your insights?
Well, I think certainly AI is the new flavor of the month. Could be very effective. It's not going to solve all your problems. It's also not going to take away jobs from people and replace it with AI. But it's certainly, we use AI every day. I actually used it at a partner meeting to write my closing remarks. You were at that meeting.
Yeah.
You saw it happen live, where we put a couple of keywords based on the theme of the partner meeting. We put it into our proprietary AI tool, and it wrote my closing remarks for me on the spot. And I read it right from one of my partner's phones, read it to the entire partner group. So it does serve a purpose. It's not the end all and be all, but I think people are going to experiment it, and people have to figure out how it can help their business. But I think, for the most part, business owners are cautiously optimistic going into this year. And, forever at Marcum, our mantras have always been based around talent and technology. Two of the cornerstones of which we built the firm, always trying to find the latest technology to help us do our job and lower the cost of delivery of our services, and having the right talent that we needed to serve our clients and their growing needs. So I see talent and technology, no matter what business you're in, being two of the key drivers of any business.
Well, Barry, we've been talking about generative AI a lot over the past year. One thing that I've taken away from some of the discussions here at this firm meeting is, 2023 was all about, understanding a little bit about, okay, how does Gen AI work, the large language models and things like that. And I think 2024, it's somewhat similar to some of the points Jeff just made, is going to be how do you leverage this? What impact can I make with my firm and with my clients related to generation AI? But it's pretty big. It's almost like the next version of the internet. So I think this is going to be it's going to be impactful.
Yeah, I think the three technology inflection points in the history of our profession, you go back to the 1980s with the introduction of the PC. That was a huge inflection point. It caused major changes as to how the profession operated and functioned. You can bring spreadsheet calculations and things that tied into all of those things. Clearly, the internet/cloud, the sharing of data and sharing of information in a different way was the next. And probably generative AI is going to be something like those two as far as its implication into the profession, and I would say into small business. Would you agree with that?
Yeah, those are three major points. We saw others along the way: robotic process automation,
segment oriented though more.
Yeah, but there's no doubt that generative AI is going to have an impact.
So tying that, let me ask you a question. The third sort of icon on this slide, as it relates to the survey, was a shift. Let's call it a pendulum shift a bit on the talent side from the CEO perspective. And I think we are seeing that throughout the economy, including in the profession to some degree, a shift on the sort of demand for talent and the availability of talent. What's your perspective on that?
It certainly has stabilized since COVID. I mean, we went through the COVID years, 2020, 2021, where we just couldn't get people. We lived through the Great Resignation, and those COVID years when people went home and everybody was working from home, and then they had options of, if you could be based in Colorado or work for a firm in Tennessee, and you'd get hired remotely. The pendulum has swung back a little. People are not so antsy and looking to move around. I think firms have hired the people they need to, so their workforce has stabilized. We live in a hybrid world now. So, the ground rules have changed since 2020, and people are getting used to that. So I think there's just it's a much more stable workforce environment. So the people leaving and coming is not as prevalent as it was at the beginning of COVID into 2021.
Yeah, there was even
Yeah.
this term of hoarding. If you had a person, even almost this, no matter what their performance was, you hoarded people because you were afraid not to have it. That certainly has shifted as well.
Absolutely.
So one thing I realize that there's been an issue in kind of sharing the slides. The good news is we've only had one slide, so we're working on getting that corrected. So let's just continue this discussion. One thing that we were talking about before we came on was just the evolution of firm services and business models. So let's just talk first about firm services. I mean, you look at where we're going with the transformation of audit. Tax services continue to get automated, and there's more and more being done in tax planning. And one topic, Jeff, that we talk a lot about here on the town halls is the client advisory services area, and how that's such a critical component of the trusted advisory role. So as you sit with your team and you're thinking about your 2024 services, maybe share some of your thoughts and insights.
Yeah, that's interesting. And you were talking about small firms earlier. Client advisory services is basically being their accountant.
Right.
A lot of large firms grew and specialized. And you were either a tax person, an audit person, or an advisory person. And you got away from the role of what many small and medium-sized businesses viewed as their accountant, who actually helped them with everything. Small businesses don't want to know you're a tax expert or an assurance expert or a valuation expert. They want an accountant.
Right.
And when I started in this profession, I was an accountant. And then as the firm grew, we specialized and we created different departments. And now we're seeing a shift in big firms like Marcum, where we're setting up these groups that actually act as accountants and help clients by giving them business advice, help them by running their IT systems.
Right.
We certainly have to adhere to independence rules and things like that. But for clients where you are not their auditor or you're not issuing a reviewed financial statement, and you can do some of these other services and independence is not an issue, there's this sort of like going back to basics. Whether it's a client accounting services, whether it's hosting their computer technology or managing their technology for them. You certainly have to be aware of all the independence ramifications, but this is sort of like back to the past.
Back to the past, but the thing is technology, we're just talking about technology has enabled this. The cloud has enabled the delivery of these client advisory services in a completely different way. And I was having a discussion with your leader of your digital practice and CIO, and one thing that he was talking about is something that all firms of all sizes are talking about, just standardization of the tech stack, and how he was actually increasing the size of your team to build out a tech stack, which is leveraging third-party solutions, so you could build a scalable practice. But it comes back to technology kind of helped change that service, even though that service might have occurred in a different way 30 years ago. It really is propelled itself with the evolution of the cloud.
Yeah, we're building we're hiring the talent to build the technology to reduce the cost of delivery of these services to a point where we can deliver it to the client less than they can do it themselves.
Right. And not just that. I mean, you can interpret the information for them in a way that they can't hire like a single finance professional to deliver that. And Barry, that's something you and Lisa are very familiar with. There's really one of the drivers of the client accounting services area is the fact that the small business, the mid-sized business, doesn't really have a career track for that finance professional, or even the HR professional. And that's really where the firm can step up and deliver those services.
I ran a small firm or a small business, before I joined the AICPA and CIMA. And, my greatest fear was my accountant going out for an extended period of time where there was, illness or whatever. And so to know now, as CAS practices have developed, I could outsource all of that and have redundancy, have the technology continuously being kept up to date. And I think that's a huge value add, to take that worry off of one of the 100 hats that your small business owners are wearing on a daily basis. I think that's a huge value add.
Well, it remains a big growth area. And again, going back into history, Jeff talked about being able to do it regardless of the size of firm, more cost effectively than the client can do it in-house. That actually was the opposite with the introduction of the PC. When people started putting servers in their offices and stuff, it was actually cheaper to move that type of service away from the firm and to do it in-house. But now that pendulum has swung completely back because of how technology has evolved.
Yeah, through technology, we can be in the client's books at the same time they are. Because
Shared
it's all up,
data.
it's shared data,
Yeah,
it's
right.
all up in the cloud. You don't have to go to the client's office anymore. And you and the client could be sitting in two locations, looking at the same data on the screen and have a conversation about it.
Back to the trusted advisor role, which
Exactly.
enhances that role.
Exactly.
So let's cover two more topics here as we, talk about the overall business environment, business models. And let's first talk about, business models for firms. We had a panel today discussing the many different business models that are out there. Some of these are related to larger firms, be it private equity, be it ESOP, or be it just the traditional firm practice. So Jeff, your thoughts on the evolution of these business models?
Well, it's certainly been interesting. Private equity came into the profession in a big way about 2.5 years ago. There have been a bunch of players from the Eisner Ampers, Citrin Coopermans, Cherry Beckerts. There's also some other private equity firms doing like a roll-up of accounting firms like their car washes or dental practices. It's certainly changing the economics in the profession. It's certainly changing the valuation models of what practices are worth. It's looking to give equity ownership down to the employee level, where we can pay our people with stock and options and phantom stock. The days of people becoming equity partners in a firm in their 30s and staying for another 30 years to get that deferred compensation is not what the 30-year-olds are looking for today. When we talk to our 30-year-old partners about becoming equity partners and contributing capital and then waiting 30 years to get their retirement, they look at us like we're crazy. They're looking for something different. A couple of firms have done ESOPs recently, BDO being the largest one. So I think this is just the beginning of a shift. I firmly believe, although we're still a partnership, that the partnership model of public accounting, where partners capitalize the firm all on their backs 100%, is an antiquated business model. I also think waiting 30 years till age 65 to retire and then monetize your equity is also an antiquated business model. It remains to be seen what Marcum does about it, but I think these changes are here to stay. If you would have asked me last year, I didn't know there was going to be an ESOP in accounting. So it only remains to be seen what other forms of ownership emerge over the next 12 to 18 months.
But Barry, let's do a quick follow-up because we got some questions coming in. And Jeff, just on that, so you're talking here, we've got a lot of small firms on the town hall today. So that's kind of, large firm, private equity looking at that, change the partnership model. But how about, and you said there is some roll-ups being done.
There are private equity funds out there rolling up $5 to $10 million firms. It's not just large firms that are doing this.
Right. And there are some looking at smaller firms to bring into the private equity space that ultimately creates a large enough platform that they might become attractive to one of the larger private equity platforms that is out there. I would tie it back too, though, to the opening question we had about small business. And you said that small firms have been here throughout and they will be into the future. The traditional model will survive as well. What we are seeing is a set of different options that will be right for some people and not right for some people.
It's always been that way.
Right. And so in the last year, we've had two large firms come together to create almost $1.5 billion size firm through a traditional model, through a traditional merger model. And there's many of those traditional models, but there are alternative models that are out there that are also working. I personally think that's good for the profession. No one can predict how these will work the best long-term. And the fact that traditional and some other models that are out there, time will show which ones of those make the most sense as the world continues to evolve.
Well, it definitely is accelerating things. I'm seeing that. So let's just, final discussion point, Jeff, I know this is something you give a lot of thought to. It's just culture. The culture at Marcum. And and when you're thinking about culture, one thing we think about today, and I remember talking to you about this a few years ago, was working remotely, and we had a session here at this firm meeting just before the pandemic where we talked about working remotely, and that was very relevant due to the pandemic, where we all went remote for a while, and now firms are hybrid. So how do you, when you think about your firm culture and you think about how your firm works?
Yeah, it's different. We certainly have to work harder at it today than we did prior to the pandemic when people showed up 5 days a week. The 5 day a week in the office is dead. It's never coming back. Which is not to say some people still don't come in 5 days a week, but that's not our current business model. That's not going to be our business model. So you really have to work, and whether it's culture or values, you really have to work harder at keeping your firm culture and values, finding reasons that make sense for people to come in, not just saying you have to come into the office 3 days a week because you have to create a reason. You have to create a want. I personally like getting out of the house. I like going to the office. I also don't have that long a commute, which is part of it. I grew up with parents who would get on the Long Island Railroad and commute an hour and a half each way every day, 5 days a week. Those days are over. So we've really got to rethink why we need people in the office and when they don't have to be in the office. There's things I can do much more effectively outside of an office where I'm not distracted by people knocking on the door and coming in to say hello. On the other hand, there's those unrehearsed collaboration moments that you just get by walking the hall. So there's a balance, just like everything else in business.
We'll talk about, so there's not one size doesn't fit all, many different answers to this question. And you've got these policies of if you're in 4 days a week, and this is New York, you get an office. If you're in 3 days plus 2, you have shared office, and below that, you have a virtual space. And how's that working?
It's working great. We sort of did it without telling people what they had to do. We just, as you pointed out, if you come in 4 days a week or more, you get dedicated workspace. If you come in 3 days a week, we have A and B weeks. 1 week you work 3 days, another week you work 2 days in the office, and then you get dedicated shared space. And then if you want to come in less than 3 days a week, we do hoteling, where let us know when you're coming in and we'll make space available for you. And that gave the incentive to the people who wanted their own office or desk of, listen, you want it, use it. Right. But don't tell us you want an office and not use it. Which is part of the reason I have to show up. Otherwise, they're going to give my office away.
And are you, even in your different offices around the country, are you having, I think I heard you said one area, region, someone wanted to mandate coming into the office.
Yeah, we're a large firm, as you know. We have, I think it's 40 some odd offices, and one of our regional managing partners said, hey, I want this office. I want to tell the people they have to come in. And I said, well, good luck. Let me know how the experiment works. But, one of the things we're seeing, having a large amount of offices, the suburban offices where people can drive to work, the attendance level. We have one office in Marlton, New Jersey, where 100% of the people come in every day. They can drive to work. Most of the people live within 20 to 30 minutes of the office. But when you're looking at cities like New York or Boston or Philadelphia or San Francisco, where they're relying on mass transit or much longer commutes, it's hard to tell people just to come in for the sake of coming in.
Right.
We want them, if someone could stay home a couple of days a week and save 3 hours commuting, you have a much happier and productive person. So we're trying to deal with the realities of each office and each person without a firm-wide mandate.
Well, it's purpose-driven. So Jeff, just fantastic insights. I don't know, Lisa, Barry, anything else you want to add? Any other question for Jeff?
I'm just going to give a plug for Jeff's weekly blog. I love reading it. He gives great insights and just a different perspective. So thank you, Jeff.
Lisa.
It's great.
Jeff, not only have you been successful with your firm, but you've been very, very supportive of the profession and the importance of supporting the profession. So we thank you for that, and
Our
wish
pleasure.
you a great 2024.
Thanks, Barry.
Thank you, Jeff.
Thanks, Eric. Good seeing everybody.
Good seeing you. So now we're going to move into the technical update session. And the good news is our slides are working again, Lisa. So they only were not working, I think, for a couple of minutes.
Okay.
And that's all right, because we were having a live discussion. So
My technical update is always better when you can see all of the words I'm going to throw at you. So we have a brand new acronym to throw at you, and it is ERC VDP. That just rolls off the tongue. And that is the Employee Retention Credit Voluntary Disclosure Program that we talked about off my handwritten notes or off my phone on the December 21st town hall, because it was launching as we were in the town hall program. So if you were like me and you went on vacation right after the town hall ended, you might not have read about all of the things that have come out, but we've got some great links for you that will catch you up on this new program. We've got a link to the IRS announcement. And as a refresher, this is for entities that claimed ERC and have now had, let's say, a change of heart and have decided that they want to repay the ERC that they received. This program allows them to repay 80% of the ERC claim that they received. There are no underpayment penalties, no underpayment interest or penalties, and the 20% discount that they're basically getting under this disclosure program is not taxable. So lots of conversation we can have about how they designed the program, but those are the facts. There is a form available. And for those of you who tuned in after the very beginning of the town hall kickoff today, the form is in your resources, but it is a super tricky format. We're seeing some people that have luck downloading the form to their desktop and then trying to open it with either Adobe Reader or Cute PDF Reader. Maybe that'll help you. We will continue to try to figure out what the secret words are to get that form to open for you. But if you're trying to access it through the link, you can try to just right-click download and see if that helps. As a reminder, this is a time-sensitive offer from the IRS. This program closes at midnight on March 22nd. We will have some upcoming training a little bit later in January, so we'll make sure that we get the details out to you about that. That just is going to talk about where the kind of the logistics of this and how to talk to your clients about it, and some other information. As a heads up, the form does ask for the information of who helped provide services around the ERC filing if someone else was involved. So if a CPA was involved or if an ERC provider was involved, the IRS is asking for that information. If a third party filed, so let's say that you've got a client who's part of a PEO, and now the client is saying that they want to pay back or disclose the ERC, the third party has to file for the disclosure program on behalf of the employer. Got a great Journal of Accountancy article, and the IRS has made both some FAQs and a hotline available, and you can access those links through the IRS website if you can't get to it through this tricky little form that we have. I'm going to switch gears and talk about beneficial ownership information reporting, BOI, another form that we tried to download for you into the resources that is being cranky. And even though the FinCEN was ready to accept filings on January 1, we're not able to get that form to you in an easy to use format. But as a reminder, this is anti-money laundering that is basically targeted at small businesses. And existing companies have until January 1, 2025 to file this new report. Companies that were created in 2024 have 90 days to file. And if you've filed and there's a change in ownership, then you've got 30 days to file. There are 23 exemptions. The one I want to continue to call out is that for businesses that are domiciled in the US and have 20 or more people and have gross revenue of 5 million or more, they are not subject to this filing requirement. I will point you to the small entity compliance guide that FinCEN has put out. It is really helpful. It gives you flowcharts. It talks about the exemptions. I know that I'm seeing questions online about trusts. How do trusts work in a beneficial ownership information reporting situation? That FinCEN guide is going to be your best bet. If they give you an answer, that's where you're going to find it. And there are also questions around community property states. There is no guidance from FinCEN about how ownership or beneficial ownership is going to construe in a community property state. So, as we said on our previous town hall, BOI is a fluid situation. We did get the forms, and I think I've got some links on the next slide to some of our new resources. So they are accepting reports now. And I've seen some that go through. I've seen CPAs who are filing it on behalf of their particular firm. So it's fairly simple and it has worked. And then I've seen others where they've tried to file and the system crashed. I wouldn't want to be the first one out there in the gate to file it. But if you want a guinea pig with your own records, then that might be something to think about. One of the things that I've seen as maybe a helpful hint is to have tell your clients to file for FinCEN IDs, and there are instructions on the BOI website from FinCEN that'll show you how to do that, and that might help with streamlining some of the information. We have a new podcast that I'm really going to suggest that you listen to if you haven't yet. So you'll see that link under Traversing the BOI Reporting Requirements. Melanie Lawrenson, our Director of Advocacy, who's been working very closely with the DC team and FinCEN on BOI, joins April Walker along with a practitioner and Roger Harris. So a lot of good practical insights into how a practitioner is approaching BOI with their clients. And then the BOI Resource Center, we continue to add to on a regular basis. On the December 21 AICPA Town Hall, we talked a lot about risk management considerations. If you did not catch that one, or if you just want to revisit it, at the end of the slide deck, we give you a link to catch the replays, so you can easily catch up on that one. I'd highly recommend that you take a look at that if you have not already. We mentioned the forms have been released, so I think I've got a visual for you. And it is a 4-page form. There are about 51 questions that are asked. And, for a simple LLC that filed, one owner LLC that filed with the Secretary of State, it's probably going to be pretty easy to comply with. But as you get into more complicated entities, I think you'll need to have your clients take a look at what's being asked. We've gone through the forms. We have some concerns. We have some comments. These are brand new. So we're going to take our time to look at the certifications, to look at how they're asking the questions, and what happens next. So again, it's fluid, and we continue to have the concerns.
We do. And Lisa, just to jump in, because there was a flurry of advocacy efforts that went on after a delay bill passed the House. And we reported that at the last town hall. We engaged our entire grassroots, that means every member, to reach out to their senator to say, Senate, pass this under expedited procedures, to get a delay, again, in order to prepare those small businesses to do that. It didn't happen, unfortunately, but we haven't given up. Everybody, again, is going to have to start moving forward with the tools that we're giving them. But we are talking those members of Congress, those senators, about suspending the program until information can get out to small business to try and relieve a little of the anxiety. There was a letter from 80 members of Congress that went to FinCEN saying delay, and they ignored it. So those members are coming home from the holiday not happy.
And again, it's not that we are anti-money laundering measures. It's that we are truly concerned about the lack of awareness at the small business level, because that's who this is going to impact. And we just want to make sure that small businesses, again, wearing 100 different hats on a daily basis, that a small business owner doesn't even know about this and simply overlooks it and is subject to some substantial fines and penalties. So we spent a lot of time on the last town hall talking about unauthorized practice of law, our UPL acronym. And, Barry, I know you and I have talked about it quite a bit. There are no states as of now that have said it is UPL. And we continue to, make sure that we're keeping that on our radar and that we will respond if we hear anything from states.
And again, from the December 21 session, there was some discussion from the liability insurance perspective, and there is more work being done on that, just like reviewing the forms now that the forms are out. And we will come back to you in due course when the forms are totally finalized based on our feedback. Hopefully they make some changes, and then the insurance understanding from that standpoint, and come back to you, at least from our plan's perspective, to be able to communicate with hopefully some clarity from the underwriters on that.
An engagement letter is an important piece of the puzzle. If you choose to provide these services for your small business clients, you want to make sure that you get the right engagement letter. And we are working on that now. Again, now that the forms are available and we can see what it looks like, we will be actively working on getting an engagement letter template out to you. As a reminder, my mantra from the last town hall was don't panic. For most entities, there is substantial time before you have to file. If it is a new entity, it's 90 days. But if it's an existing entity, you've got until the end of 24. So for your existing clients, don't panic. There's time. Stay with us. We'll continue to keep you updated on what we're hearing.
And still the possibility that Congress could delay it
Yeah.
based on the fact that the House has already passed the bill overwhelmingly.
Yeah, that's a great point.
Well, Lisa, it's an active town hall community out there today. We're moving into 500 questions so far in the first half an hour, and a lot coming in related to BOI. That's actually a good suggestion. The same, why can't FinCEN email or mail all these businesses that have this requirement, Mark? So that's maybe a
We'll
suggestion.
pass
We
that
could pass it on to FinCEN.
There is a question that I saw
But
earlier.
then-
Let me just address that real quick, because there are also scammers out there
Right,
trying
that
to get this personal information from beneficial owners. So your clients might be getting, you might
That's a
be
good point.
getting a very official looking envelope that says you must provide us this information. And then they charge, the unsuspecting owner to file a report. So, we'll keep looking for that, but keep that on your radar and make sure that you're alerting your clients to the potential.
And Lisa, there's a lot of questions coming in just about, and you mentioned this at the start, we've got over 9,000 attendees today, but you mentioned this at the start, how do you get that form? And we'll put this in the newsletter, but just real quickly, you want to restate that?
I have seen coming through the Q&A chat from some of your fellow attendees, they've downloaded the form to their desktop and then tried to open it with either Adobe Reader or Qt PDF Reader. You may try, the links are on the slides as well. You might try copying the link from the slides into your browser, downloading the form from there. And I apologize, I don't know I've never seen forms like this. I couldn't access them from the web.
We'll try to get more information for the newsletter. So,
Yeah.
I think it's important, the scammer point, and you're right, for the vast majority of entities, if Congress doesn't act, you have to the end of the year, so don't panic. But as you work with clients this year, I think our number one advice is use that interaction with the client to make them aware, and particularly make them aware that they don't fall prey to people trying to create a different environment with these filing requirements. I think at a minimum for this tax season, that's something that ought to be sort of at the top of your list.
Yeah, it's a great reminder.
So Lisa, a lot more resources going to continue to be developed. We will continue to cover this in the town halls. And if we need to, we will have special, full webinars related to BOI. And I think the answer to that question is probably yes, once we have more information.
Yeah, I'd say that's true.
Okay, Mark, Washington, D.C. You usually are the lead off for us. We decided to kind of put you at the end of the batting order today. But there's still plenty going on.
Shifting sands, Eric, shifting
right.
sands. So I want to recap how things ended last year, because it's going to play into some important things for us at the beginning of this year. If you recall, there was a kind of last minute government funding bill that passed that created two deadlines. One, January 19th for, let's say, half the government. The second was February 2nd for the other half of the government. The other half, the February 2nd, includes Treasury and the IRS. Obviously, very challenging timing for us if they cannot get a deal. A couple other factors that are important to remember from how Congress went out at the end of the year is there was a lot of pressure related to foreign aid funding, Taiwan, Israel, Ukraine. There was a deal to actually tie money that had been appropriated and passed in the Inflation Reduction Act for IRS enforcement to pay for the Ukrainian aid. That was dismissed by the Senate. It was called a non-starter. Then they moved to tying that foreign aid, Israel, Ukraine, and Taiwan, to a border deal. So a more aggressive border focus, basically from the Republicans, would get the Senate Democrats the aid that they were looking for in that package. So that's going to continue to play out into this. The other thing that we were talking about at the end of the year, Lisa, was the idea of a bipartisan tax deal. There was always this hope that they were going to be able to put the child tax credit together with some of the business credits, as well as tie some things like 174, expanding and extending 1099, and then even Barry, our extension safeguard bill, right? So that's how things ended, okay? We didn't get that year-end bill. But we're starting out the year with some real positive discussions about the possibility of putting together a bipartisan tax package that would lay out the framework that I just mentioned. But it's going to kind of depend on how these other issues play out. So right now, there is a focus of proposal anyway and discussion about tying that border security, the Mexican-American border, to government funding now. Okay, what that does is elevates, I think, the challenge to actually getting government funding down. That's obviously a very partisan issue. There's a lot of emotion around it. It's highly political. How that plays out is again, it's just a proposal that's being put out there. One party sees some leverage because there's a government shutdown coming, and then the other party's trying to figure out how they're going to get foreign aid funded. So the way things are starting, and by the way, they come back next week and they have 10 days to get this done before the first shutdown, is they've got to figure out how to get those bills passed. If you recall, last time, the speaker lost his job. That's how we got a new Speaker Johnson. And so there are several ways you could do it. A short-term extension, doesn't sound like they have the votes for that. Trying to do a deal where it would be the funding levels for the government on the two deadlines tied to border security. There has been not a lot of interest in that from the Senate, so it's still got to get through the Senate in order to make it to the president. So I guess the short story here is that there are some serious challenges ahead, and there is, I think, a decent possibility increase that we're going to see a government shutdown impacting the IRS. The good thing about this ladder or to-date trigger is the first trigger is going to hit and the pain will start of a partial shutdown. And so there will be some time with a partial shutdown where the IRS is still open and running, where they may be able to come to some terms. It's not going to be shut down forever, but the functioning of government right now, the political circumstances are not good. We're certainly preparing for a shutdown. We've got mitigation strategies that we have given to Congress that we're calling for in order to be able to utilize money that had been there for enforcement that we think would help a lot.
Well, Mark, and we don't have that slide this week, but we've highlighted the AICPA's advocacy and communication efforts related to an IRS shutdown, and I know that's been well received. Barry, maybe maybe a comment on that, and then we're going to kind of broaden our discussion a little bit about what a few other matters that are happening in 2024 related to DC.
Well, we've been very aggressive on the impact on the IRS, and former Commissioner Reddick has quoted our position as being the right position and things of that nature. And I think it's fair when I think about the town hall community. We've been talking about the possibility of a tax deal for 9 months now, and it's sort of frustrating. I understand. I talked to a lot of members, and it's frustrating because why isn't there relief in the research and development area? Why isn't something being done? And the reality is that nothing is getting through. I mean, virtually nothing is getting through. And Mark has some data showing how many pieces of legislation actually got through in the first year of this Congress, and it's a record low number, a near record low number in history, or at least since the early 1900s. And so the reality is that nothing is getting through, and that is frustrating because we come up here and we talk about the possibility of these deals. And there are possibilities, and then they almost immediately fall apart because everything is so small of a majority. I mean, basically the Senate is a 1-vote majority, and the House is a 2-vote majority today because you have 2 vacant Republican seats, or previously filled by Republicans so you have a 2-vote majority in the House, and it's just no compromise is occurring, and essentially nothing is getting through.
Well, the narrow majorities, very absolutely. And then the fact that there are so few legislative products, there's so few things that move through the process that all the leverage gets tied to these must-pass things like government funding.
So everybody's issue is on those bills, and then that causes them to fall apart.
Exactly.
So let's just take it up to the presidential level. So I mean, you're in the system. We've just been talking about Congress.
Yeah.
So Congress didn't get much done. And right now, there is a lot of, we got a few big primaries coming up in January. So Mark, you gave a pretty good talk about looking broadly ahead at 2024 and what could happen. What could happen with both the Republican, nominee as well as the Democrat.
Yeah, well, so we'll see. Again, I'm going to go back to shifting sands, Eric.
Right.
We'll see how this plays out. But right now, if you look at the polling, and people can say, well, I've lost faith in polling, but it does matter,
Right.
particularly at the presidential level,
Right.
for things like major donors and
Right.
whether you're on a debate stage and things like that. But if you look at the current polling, former President Trump, who's obviously got legal challenges, courts are looking at whether he's going to be in the ballots. But he's polling within the margin of error, neck and neck in general, in a general election against President Biden, which is amazing when you think of this stage. And actually, when you look at the swing states of, like Nevada, Georgia, Arizona, Michigan, Pennsylvania, former President Trump is leading in most of those states, or at least in the margin of error. Again, it is incredibly tight. I think that there's buzz in Washington about whether ultimately, President Biden will be the one that actually makes it, to the convention and out of the convention and is the candidate for the general election. And then, this is again uncharted territory with former President Trump and how that's going to play out. But when you look at like the 270 electoral votes that are needed, there's a slight advantage for a generic Republican, and then you look at the 77 needed to get to the over the top of it, and you could get those from the swing states I just listed. So it's very up in the air. It's very fluid, and how this is going to play out is going to be interesting. And the other thing to add to that is 2025. So we're going to have the election this year. Maybe we get a bipartisan tax deal. 2025 is going to be a tax year because there are a lot of current provisions that are expiring from previous tax laws.
It'll be a tax year, or even if it's not a massive tax bill, the expiring provisions will be massive tax effect.
Exactly.
So 2025 is going to be a very significant tax year, regardless of the outcome.
Yes.
And the good thing about the polls today is no matter what you want to have happen, what your personal belief is, you can find people predicting that outcome. So you can find a comfort zone if you want it, because that is how close and how, and in reality, the House and the Senate, most people would predict pretty good chance of the House flipping to Democrat, pretty good chance of the Senate flipping to Republican.
Today, when you look at some of the factors like redistricting and retirements is a huge one. We're starting to head towards a record in retirements in the House. You absolutely could see that. Here's the one thing, Barry, that I think we can count on. Who knows who's going to win? We can operate with any administration, but that majority is going to be thin.
It's going to be thin.
It's going to be thin.
Which makes, again, the likelihood of getting anything passed lower. Certainly anything that has a bunch of moving parts to it, lower.
Right.
So we'll continue to do our best here with the town hall, bringing the best available information. And as you said, Mark, there's critical issues like suspending, just giving feedback on BOI, suspending, getting it right, getting information on the forms, getting answers to these questions.
Absolutely.
So we can work. Sometimes we talk about Congress, we talk about the White House, and now we're talking about the different kind of administrators out there, be it FinCEN, be it Treasury.
And the BOI issue, I said nothing is passing, but it did pass the House with only one negative vote, right? And that was probably an error. But then it gets bogged down in the Senate. So it's even when you can get something, it's
a challenge. And I'll tell you that we do. Again, the team in Washington, when the Russian sanctions came down, there were issues that the profession had, and we were able to work with FinCEN to get the right answer there. Nobody's happy with what's been put out, as Lisa pointed out, but we do have open communications. We're going to try and get some of those things addressed.
So Mark, just to be really clear, the AICPA is not partisan. The AICPA is, so just.
We're definitely not
No.
partisan.
Yes.
No.
I knew you're not, the answer to the question, but bipartisan, there's just questions coming in. Your team tries to share the views on both sides here and then understand how we best can kind of advance, constructive discussions. Barry?
We're in fact considered one of the most bipartisan groups in Washington. And one of the primary reasons of that, for instance, in the tax area, most of our commentary in the tax area is addressed on the operability of things that are being proposed, the unintended consequences of things that are being proposed. We don't get into debates of what the rate should be or what's a good credit or not a good credit. We talk about the implications, and that voice is appreciated. It's just that the Congress is so divided.
And actually, if you think about, Eric, the list of issues that I went through at this conference, the vast majority, if not all of them, are supported in a bipartisan way.
Okay, thanks, Mark. Lisa, so many questions coming in. The thing is, it's good. We have a lot to review over this upcoming,
Absolutely.
first weekend in January.
I'm going to tackle one of them, which is a continuing source of confusion. The question is, I thought public accounting firms were exempt from BOI reporting. And if you look at that small entity compliance guide that I gave you the link to on the slides, there is a discussion around, it's listed as exemption 15. An entity qualifies for this exemption if it is a public accounting firm registered in accordance with section 102 of Sarbanes-Oxley. So those are not typical accounting firms. Those are going to be the larger firms that are doing public company work.
Which are going to be exempted by the 20 employee in the
Yes.
in the revenue base anyway.
Yeah, so I just wanted to go ahead and clarify that one. Again, I get lots of questions about nonprofits and trusts. The Small Business Compliance Guide is going to be a good resource for you.
So thank you for all of the questions. We leveraged all the questions from the final town hall of 2023 on BOI. We're going to leverage all of today's questions. So greatly appreciate the dialogue. Here's an in summary slide. A lot of topics covered today. Appreciate the broad business environment discussion that we opened with Jeff Weiner on. Here's a couple of resources that you can leverage. We talked about generative AI. It is going to be the Gen AI year. You're going to be hearing more and more about that from all of your technology solution providers. Some highlights from Digital CPA. Lisa, we've got this great, I know this is something that you're looking forward to,
Yeah.
the monthly A&A Focus podcast.
And again, this is free for AICPA members. It's eligible for CPE. The first one launches January 10, and they've already got them scheduled out through April. If you sign up and register for this first one, you'll get signed up and registered for the remainder of the series, just like you do for the AICPA Town Hall. We've got a couple of great A&A folks who will be able to go into more detail around FASB disclosure changes on income taxes and all of the other things that are coming out on the A&A side. So I think it's going to be a really great resource, and I'm excited about it.
So our next town hall is on January 18th. In the upcoming newsletter, we're going to communicate more on how to make sure you are set up with the auto registration for the town halls. We want to, and Lisa, one thing that we're working on is the full 2024 calendar. And we'll have a special slide to publish that. It's Thursdays at 3 p.m. and except when we're having a very special broadcast, it's something like AICPA Engage or Digital CPA. We greatly appreciate this opportunity to connect with you every couple of weeks. I cannot tell you how helpful this is to directing us on what to focus on and keeping us really informed. Barry, just maybe some closing thoughts from you related to the community, related to what we're going to try to accomplish in 24.
I interact with members a lot. I get comments in the town hall from no matter where I am and who I'm talking with. So the community is broad and alive and well, and it's great. And to echo the question comments, it really is important. And as Eric said, 500 or so. We're not answering 500 on here, but they get analyzed and put together from a thematic perspective, and really do go to all of our technical areas, et cetera, to try to address those things that mean the most to our members that were participating in the series.
Well, thanks to all of you. Best wishes for a healthy and successful 2024. That's all for today.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.